Welcome to Markets Now. I'm Michelle Rook with Roose U.S. Commodities. Well, we did see kind of some mix to lower trade in the cattle, new contract lows in the hog futures, and a down day across the board in the grain trade. Kind of a bloodbath in the grains today, Don. So let's start off talking about massive funds selling. Why are the funds in such big sell mode right now?
Well, the funds basically, if you back up on it, the funds have been selling the grain market for about 18, 19 months here. So, they got to look here that the technicals continue to be weak. I mean, when you're in contract lows, that's no sign of a real positive market on corn and soybeans. But I think the reason they're selling the seasonalities, Michelle, this time of year is one of the more dangerous times of the year from thinking positive, because if it looks like we're marching to a crop, you take risk premium out until you need it and add it back in. So probably, like we say, for every action, there's an overreaction. They're probably pressing a little hard. So you have to be careful. Funds short, big reports ahead of us. Weather is still ahead of us, July and August. So I think it's just, it was that little window here that they had a chance to really press it technical. And stocks bigger than a year ago gives them a reason to. And the weather kind of improving from some tough conditions before, Michelle.
I was going to say, are the funds anticipating bearish stocks report as well as maybe acreage reports on Friday?
Well, most definitely. At least they're not afraid of it technically. Remember, in the January report, very much the same structure. The market was oversold. The funds were pressing it. 9 times out of 10, you would have seen them evening up ahead of that. They didn't. They got a bearish report and the market thumped to the downside. So a little bit different this time. We're sitting here at levels lower than the lows of after that time frame. So a little bit different structure, but we're a little further in the growing season. But I think it sets up for a big two-sided type of market and a dangerous report on Friday at 11 o'clock Central.
Yeah, plus you factor in end of month and a quarter, isn't it, delivery period starting on Friday as well?
Yeah, and that's part of the problem. What happened is first we had options expiring, June options last Friday. So, that kind of put us down to some of these strike prices. Then we have first notice day coming up here the end of the week. So we're going to find out who wants to own these deliverable stocks. And, that's part of the issue this time of year, Michelle, is you've got wheat harvest going on. We're probably 50% done. So you're putting wheat in the pipeline. Then you've got Brazil corn harvest going on. They're about 35% harvested in south central Brazil. So you're putting world corn back in the pipeline. So it's one of those things where you're not taking away supplies from the market, you're adding to. And so you need something that says, listen, who wants to own these stocks? You're going to reach a level where the end user is going to have to step up and buy it and say, that's a level. It probably starts with the deliverable stocks coming up on first notice day.
Yeah. And funds, they're actually record short for this time of year? Do they keep pushing the short side?
Yeah, most definitely. The funds are record short, near record short across these grain markets, of course, along the meal market, the other side of it. But, I think that, until you get some technical signs, we actually tried this week. We had key reversals yesterday on corn, soybeans, and oats. That often signals a major low or major intermediate low. It didn't hold, but I think it says that's a little bit of a warning sign that the market's trying to bottom, Michelle.
Okay, so we haven't bottomed yet, though. We did make new contract lows in both new crop corn and soybeans. Where do you find those areas of support on the charts now?
Well, I think when you're in just say catching a falling knife, a sinking ship, what you're really looking for is a lot of times we go to these round numbers. $11 on November soybeans, let's call it over under there. Hopefully we hope. Otherwise, if we get under 11, it's hard to get back over that. Probably supports corn, same thing around this 440 number on D's corn, big support zone. Let's hope that one holds. Then it's a dime lower each time, 430, 420, all the way down to 4. But one of those levels will catch. Hopefully it catches sooner rather than later. And you need some kind of a technical turn, Michelle, to start to spook the technical traders back to the upside, which we get. It's just that we're not there yet. We tried, like we said yesterday, just didn't work out and back to the downside.
Yeah. And where do you find support in wheat? And can you bottom that market until you get at least halfway done on harvest?
Yeah, oftentimes, it's same thing. You hate to say it, but you're going into the gut slot of harvest. Hard to be bullish on wheat unless the crop just isn't there. Well, for the most part, it's there in the U.S. We're not sure on the other areas yet. That'll be heading at us. But usually, when you get close to 50% harvested, you start to see some support, just because producers selling just really lets up. End users start to try and secure it, which I think that's what's happening. It looks like Egypt's coming back into the world market. And we think that'll give us some support here too. So, it's a dangerous market. It's one sitting basically about 20 cents off of contract lows, on a huge break. And, you got the right ingredients on the market to try and stabilize right here, Michelle.
Oh, let's hope we find a bottom or a low soon, Don. Okay, cattle market. We made some new highs for the move yesterday. June made new highs for the move again today in the live cattle futures. But do you think this market continues to get pushed by the record cash, or what happens going forward here? And are you concerned about any end of the month or end of the quarter profit taking?
Well, the big thing on the cattle market is the beef demand domestically just is strong, and that's driving everything. You got the box beef up over 320. You got the packers still making a little bit of money, $20 a head. You got the feedlots making a little bit of money. So I think it all starts with when does, even at 195, packers making money, feedlots making money. So it's up to the consumer. Our exports are just poor on cattle. You want to blame it on the U.S. dollar. So we'll see if that's really the case. But it's the domestic demand that's driving this thing. Usually it stalls out around Father's Day on domestic demand, and certainly as we hit the 4th of July. So you should be on a ventilator on the domestic demand. From our viewpoint, we'll see.
Okay. And what about the futures? Do we get any profit taking, especially, can you get any when you're seeing such a big discount with the futures to where the cash is?
Well, that's the big story, is that the discount on the cattle is just too big. People were anticipating this typical seasonal break. We usually drop about 9-10% on the from the top to the bottom, spring high, summer low. So that one's just not working out. So the contra seasonal, so you have those people getting out. You have the cash continuing to move up. So your drop is probably not going to be as much as it typically is, just because we went higher than you should have. And then, by the time we hit September, you're back finding some support again. So school lunch buying and everything else. So, you got about a month and a half here for the cattle to top and drop.
New contract lows in the hog market again here today. Is that a demand problem or a supply problem?
Well, it's just the opposite of the cattle market. Our exports on pork, because we're cheap, in the world, has been very strong. Our domestic demand has been poor. Cutout just continues to flag south. The consumer appetite for pork, for whatever reason, just isn't there, and that's the press. Hog and pig report coming out Thursday at 2:00. It's going to show more liquidation again. It looks like the breeding herd's going to be down about 2.7%. Same old story, though the pigs per litter up 2.5%, compensating some. Still have the liquidation going on in the hog industry. Farrowing intents on out look like we're going to be down 1.5%, Michelle.
Don Roose joining us, U.S. Commodities. That is Markets Now.